live broadcast via the Bloomberg terminal. Through this program, you'll get access to 15 listed companies' first quarter financial highlights, growth strategies and market opportunities, and Bloomberg analysts' economic and sectoral outlooks. I am John Lee from Bloomberg Intelligence. We're on second half of our day 2, and we can assure you that the 3 days are packed with captivating discussions and stimulating showcases. Before we got started, if you joined us this morning, you should be familiar with these items, but allow me to repeat this for our new joiners. If you experience any issues with your audio or video during the broadcast, please simply try refreshing your browser. You are all watching from the main stage, and any time throughout, you may submit your questions to any of the speakers. Just please type them in the Q&A section on our event platform. Throughout 3 days, you'll be able to access Expo, which you can find on the event platform's menu bar. This interactive feature allows you to explore our feature-listed companies' useful resources, interact with them via chat, live video sessions, and even schedule a meeting. If you click on the button that says register your interest in each of the booths, our listed companies will be more than happy to have a follow-up discussion with you. Now, for today, during our morning session, Philinvest Land and RL Commercial REIT joined us. And this afternoon, we're joined by Megawide Construction Corporation, Cemex Holdings, and All Day Marts. Now, let's get started. For our construction outlook, joining us from London, I'd like to call in Sonia Baldera. Sonia is our Senior Analyst for Infrastructure and Building at Bloomberg Intelligence. Sonia, over to you.
Hello, I'm Sonia Baldera, and today I would like to drive you through the construction investment booth team. I would like to drive you through 2 main topics. First one, can the new geopolitical challenges derail construction investment priorities in the US, in Europe, or even in China? And how the emerging Southeast Asia construction outlook will look like in this context. Also, what are the Russian-Ukraine drags on the big infrastructure plan? Should we expect anything soon? Big plans just moved on? Well, in the past 10 to 15 years, the global construction industry has been driven at more than 50% by Asia-Pacific region, mainly due to China growth. And this is not new to you. The chart that we are seeing that just shows the cement consumption in the past 10 years provides that clear evidence. Therefore, the biggest question mark is how the next 15 years or 10 years will be for the sector. Well, I tell you, our analysis show that the construction for the sector is likely to continue to pivot to Asia in the next decade. But before I delve into what is going on in the region and how we see the accelerators and the brakes going forward, let me give you some brief lights what are the Western economies in terms of this industry. Let's look at U.S. construction. Well, let me tell you that U.S. construction activity is now exceeding prior levels, including the 2005 peak, with the bulk of the leading indicators sending bullish signs at least for the 12th next month. President Joe Biden new infrastructure package and policies look set to keep supporting the building materials demand, and with housing market confidence still robust, despite the inflationary pressure and the rising mortgage rates, concerns that the long-term outlook must be controlled and tracked. And what about Europe, you must ask? Well, at least the European construction PMIs, the last one that came out, and indicators suggest that a continued recovery is still on. With some of the companies that are likely to surprise during the current year. Actually, the first quarter for some of the companies were already quite surprising, with them showing stronger order books. and not much being affected by the demand. The tangible appetite incentives for some investment boosts our confidence. Of course, we are cautious about what can happen in terms of the outlook in the middle of the Russian and Ukraine war and its effects on the building material costs and interest rate expectation. Even though construction is speeding across all the European Union. And guess what? It's led by Germany, whose production has surpassed pre-pandemic levels despite the war in Ukraine. And this country is followed by Italy. France is just behind. Recovery cycle lags a little bit, but and this is because of the presidential election recently. But so far, we think that the bottom has gone, and we expect acceleration to continue in the next month. Also, momentum advances in all the order books indicators, and confidence for the sector keeps rising in the continent. Only Spain has continued to decline, but even though I see in some of the indicators that in terms of the permits, that eventually this country as well will go up in the next following months. So in this context, let's have a look at your particular region. Emerging Southern Asian construction big picture as we see it right now. Well, let me tell you that the construction industry in the biggest emerging South Asian countries, Philippines, Indonesia, and Vietnam, is likely to grow faster than its neighbor China between 2023 and 2026, our analysis show. And this is due just the zero COVID policies, the economic tensions with US. China might face some bumps along the path, even with the renewal pledges of infrastructure investment by the Chinese government not long ago. According to NBS, the total value of contracts signed by the construction companies in China grew 6% in 2021, growing from $4.7 trillion to $5.1 trillion in 2021. And what about the rest of the region? As far for the total construction output for the three main countries I mentioned, Philippines, Indonesia, and Vietnam, they just total around 362 billion. And they expect to rise between 5.8% and 1.1% in 2023-2026 period, according to global data forecasts. China output only will increase for the same period, we expect 4.5%. Yes, the growth will come mostly from the Vietnam. Well, the accelerator, it's about 8.1%, making the construction GDP for this country at the highest level, around 20.7%. While the Philippines may contribute only with 14% for their construction GDP. COVID-related restrictions are easiest for these trio countries, which gives their construction industry definitely a competitive advantage. As they even are seen by some Western countries as a replace market for some of the supply chain disruptions. And let's look at Philippines right now. Well, Philippines construction industry is likely to continue to expand faster than the average in the Southeastern Asia. After it grew 10.6% in 2021, following an annual contraction of 30% in 2022, the total gross fixed capital formation in the construction industry rose from $45 billion to $50.2 billion in 2021. So the construction industry is seen to expand by 20.8% this year before register an annual average growth of 7.5% for the same period, 2023 and 2026, according to global data. And this is just due, according to what we are seeing, supported by the Build and Build program, or the BBB program, especially focused on transportation, electricity, and housing projects. The program aims to encourage investments, facilitate job creation, improve the quality of living in both urban and rural communities, as well to boost economic growth. So let's look right now at construction industry in Indonesia. Let me say that in Indonesia, it's likely to continue to expand slower than its region on average. So over the 2023-2026 period, the construction industry is expected to register an annual average growth of 5.8%. And again, this is supported by investments in transportation, in electricity, in housing, and also in manufacturing and tourism projects. In 2021, Indonesia was less affected by the pandemic, and the construction industry only registered an annual growth of 2.8% in real terms, following a decline of 3.3% in 2022, compared with its neighbors, actually managed much better than the pandemic. Meanwhile, we see it expanding around 7.2% this year, supported by the government continuous focus on infrastructure investment. On top of that, the industry also this year will be supported by the investment in the construction, in the rehabilitation of the infrastructure that is needed for the preparation for the 2022 G20 summit, and as well the 2023 Asian Summit in Indonesia. Let me now jump to the Vietnamese construction industry. And well, the outlook is also very good, as you can see it in the chart below. We expected that this country to register a rise of 8.1% for the forecasted period of 2023 and 2026. But the expansion during the current year is also expected to be very good at around 9%. And this, of course, you can see that the lower base in 2021 was one of the reasons why we have these numbers. The total investment from foreigners has been growing a lot. We see it, and this had a particular jump of 88% in the past 4 months of this year. We like to see these kind of numbers that shows that the country not only relies on capital, internal capital, but as well it has the boost coming from foreign investments that will help in the mix and sources of financing going forward. The country, as you know, probably has been as well very pushed by the plan that was presented last year by the Prime Minister, that basically sees a vision towards 2050. Just to give you a slight clue of what it represents for the country, in terms of road construction, they intend to extend the network from 1,162 kilometers in 2021 to 5,000 kilometers by 2030. So a lot of asphalt to be constructed in this country. So what are the downside risks, you must ask me? Well, you know, all is related, of course, with the downside risk coming from the rise in construction materials and uncertainties surrounding the prices due to Russia and Ukraine conflict. And also due to the demand from China as the lockdowns and restrictions continue to slow the economic growth. So material prices are likely to remain elevated given Vietnam dependence on China in some materials, and also China ports experiencing lockdowns in other restrictions such as Shanghai, but also has grown more difficulty strains from Vietnam supply chain. However, don't forget, the main pain will be centric to Europe. That's what we see. The problem right now is that, as you see in the slide, the dependence on steel supplies in Europe is huge. So it's probably that some projects might have to be delayed. And I'm talking, for example, about high-speed train. It needs a lot of steel, but not only these kind of projects. But so far, what I'm seeing, not only the data, but as well coming from the companies that I cover, that we don't see many cancellations of projects right now. Only in Russia, that has a huge list of construction, infrastructure construction, it probably will have to delay it or even to cancel. And the list is long, as you can see in the table that I provide you in this presentation. So finally, I just wanted to finish this outlook talking about what everyone is talking about in the market. Ukraine, the reconstruction. Should we expect it, or is it too soon to talk about the reconstruction of this country? The only thing that I can tell you right now is that a lot of effort is being done by European countries to create a kind of a fund to finance the reconstruction. And there's a lot of pledges right now from several countries saying that Ukraine will have the help from Europe. And on the longer term as well, and they don't want this to be like a multilateral, but to be focused on money going directly to Ukraine. Of course, there's a lot of numbers on the table, even 1 trillion, but I think it's too soon. It's too soon to talk about it, and also it's too soon to measure or to see which companies might benefit from this reconstruction, but we hope will be soon. And with this, I will let you with other speakers. See you. Bye.
Okay. Thank you, Sonia. Now, for our first listed company this afternoon, I'd like to call in Megawide Construction Corporation. Joining us on stage are Edgar Saavedra, Founder, Chief Executive Officer and Chairman, Louis Ferrer, Vice Chairman and Executive Director, Infrastructure Development, Jim Feliciano, Chief Business Development Officer, Abigail Joanne Corsico, Chief Investor Relations Officer. Megawide team, over to you.
Good afternoon, ladies and gentlemen. On behalf of Megawide, we would like to thank the PSE management headed by Mr. Ramon S. Monzon and the organizers of the PSE Star Investor Day for this milestone undertaking and for giving us an opportunity to share with you today our vision as well as the latest developments within the country. We would like to focus on high-level strategy discussion and dispense with our detailed financial results, as these are available at the PSE Edge and in our company website. We will be joined this afternoon by key members of our executive management team, headed by our Chairman and CEO, Mr. Edgar Saavedra, our Executive Director for Infrastructure Development and Head of Corporate Affairs and Branding, Mr. Louis Ferrer, our Head of Business Development, Attorney Jim Feliciano, and our Vice President for Corporate and Financial Planning, Mr. Jez de la Cruz. I am Joan Cosico, Megawide's Chief Investor Relations Officer. Our presentation this afternoon will be broken into 5 parts, each to be discussed by our management team. I will be covering the first section on who we are and what we do. Then our Chairman and CEO will provide updates on the construction segment, specifically our pivot to infrastructure. The third part will be handled by Attorney Jim Feliciano, together with our future opportunities for our land port business. Last but not the least, Mr. Louis Ferrer will be discussing the airport's recovery story and will also give us a glimpse of the ongoing carbon market redevelopment. To start off, Megawide traces its roots to an engineering firm founded by two young civil engineers, Edgar Saavedra and one of his classmates in 1997, with a startup capital of just $500,000 pesos. During this year, the Asian financial crisis broke out, but this did not deter the team from pursuing their dream and vision. In 2004, the firm was formally incorporated as a mid-sized construction outfit under the name Megawide Construction Corporation, with a primary purpose of engaging in general construction business. Just 1 year later, the company entered the high-rise condominium market, which introduced high-strength precast concrete facade walls and anchored Megawide's engineering and innovation platform to propel the company into greater heights. In 2007, Megawide qualified and secured its AAA contractor's license, the highest classification then and category bestowed by the Philippine Contractors Accreditation Board, or PCAB. In the same year, the company successfully bagged projects with the SM Development Corporation, specifically the Grass and Berkeley residences. Soon after, the 2008 global financial crisis broke out, but Megawide remained steadfast and resolute. A year later, the company upgraded its fleet and introduced key German value engineering building systems into the processes, which improved efficiencies, reduced construction time, and overall enhanced the company's competitiveness. On February 18, 2011, Megawide successfully completed its IPO, which was 3 times oversubscribed, to bankroll its expansion and modernization campaign. In the same year, the company broke ground for its 12-hectare state-of-the-art manufacturing complex in Taytay, Rizal, considered to be the most advanced and largest precast and ancillary services stockyard in the country and in Southeast Asia to date. In 2012, we participated and were awarded the Department of Education's Public School Infrastructure Project Phase 1 and 2 under the government's PPP program. The contract covers the construction of 10,000 public classroom buildings in over 2,000 locations, even across far-flung areas in Regions 1 to 4 and the Cordillera Administrative Region. On December 2013, Megawide GMR Consortium submitted the best and was officially awarded the 25-year Build, Operate, Transfer or BOT contract for the Mactan Cebu International Airport project on April 14, 2014, clearing the runway for Megawide's foray into airport infrastructure, the second leg of its diversification program. In 2014, Megawide and its partner were awarded 35-year concession to develop and operate the Parañaque Integrated Terminal Exchange, or PITX, the country's first land port. PITX is Megawide's first venture into transport-oriented development, the third segment in its constantly growing infrastructure portfolio. In 2017, the company secured a quadruple A license from PCAB, which further expanded its engineering and construction capacity. In the succeeding year, 2018, the newly constructed MCIA Terminal 2 welcomed international flights, while PITX opened its doors to the commuting public. In 2019, Megawide was awarded and commenced the construction of Clark International Airport's new passenger terminal building, which was completed ahead of schedule in October 2020, even at the height of the COVID pandemic. In the same year, the company, together with its Korean consortium partners, was awarded Package 1 of the Malolos-Clark Railway project, signaling its solid pivot to infrastructure. The company likewise signed a 50-year agreement with the Cebu City local government related to the carbon market redevelopment. And recently, the company and its Japanese consortium partners signed the contract for Contract Package 104 of the Metro Manila Subway project, further solidifying its foothold in horizontal rail infrastructure. After a quarter of a century, Megawide has built a sound business portfolio anchored on engineering and innovation and being realized across two main segments: construction and engineering, and transport-oriented developments. The EPC portfolio is comprised of residential, commercial, and industrial and infrastructure developments, which is ably supported by a complete range of construction solutions from precast, mobile and stationary batching plants, formworks, and specialized equipment operating in vertically integrated fashion. On the other hand, transport-oriented developments are divided into airport operations through its prime airport asset, the Mactan Cebu International Airport, land port operations through PITX, and the public market redevelopment through Carbon Market in Cebu. Our key executives will discuss each, together with their prospects, more thoroughly in the succeeding slides, beginning with the EPC and construction and its pivot to infrastructure, to be discussed by our chairman, Mr. Ed Saavedra. Boss Ed, turning over to you.
Thank you, Joan. Good afternoon, ladies and gentlemen. Let me begin by citing our unique advantage, which is our main growth engine and enabler, our fully integrated and innovative engineering, procurement, and construction platform. This portfolio is anchored on a cutting-edge precast technology with the largest capacity in the country and the second biggest in Southeast Asia.
It's 2 o'clock.
This is complemented by an ultra-modern formwork system, state-of-the-art and stationary and mobile batching plants located in our facility and stationed across strategic sites. This competitive edge allows us to participate as a contractor, like what we did in phase 1 and phase 2 of the PSIP and the Clark International Airport. PSIP is the Department Educational Classroom. A new passenger building where we build and deliver the product upon completion. Or we can also be both a developer and operator, like what we're doing at the Mactan Cebu International Airport and Paranaque Integrated Terminal Exchange. However, the COVID-19 pandemic unfortunately affected economic activities, including our construction. As soon as infection declined and restrictions were lifted, the segment showed its resiliency. The performance of our construction services also improved as we aggressively serve external customers to complement our internal orders. Our order book as of the first quarter of 2020 remained healthy and among the highest to date. We are also engaged in a lower number of projects, but having higher value and longer durations to allow us to maximize existing talent pool and manage cyclicality. We also realized that during the crisis, infrastructure development, especially those funded by government and other foreign agencies, remained resilient. This is the reason why we are pivoting to more infrastructure projects. As you can see from the increasing share in our order book from less than 5% pre-pandemic to a more significant 17% as of Q1 2022, and expected to grow further. Aside from this, we strongly believe that building social infrastructure and critical facilities will be the key in achieving our vision of a first world Philippines. Among the infra projects in the pipeline is the ongoing construction of Package 1 of the Malolos-Clark Railway Project, an elevated rail development that hopes to address the lack mass rail transport system. This project involves civil and structural works along 17 kilometers, including the construction of 2 elevated stations in Apalit, Pampanga, Kalumpit, Bulacan, and the viaduct structure. We also recently signed the contract of CP104 of the Metro Manila Subway project together with our Japanese partners, which covers the construction of 2 underground stations in Ortigas South and Ortigas North and access to these locations. We are also looking forward to get another package where we can offer operational and cost efficiency given its adjacent location to the current CP104 package. To complete our rail competency, we also submitted bids for the South Commuter Rail Project, a 56-kilometer at-grade rail development connecting commuters from Manila to Calamba, Laguna. The project will also be connected to various existing LRT and MRT stations as the ongoing subway system upon completion. Bid submissions were completed as of last year, and we are waiting the announcement of the winning bids, hopefully within the year. Overall, we are on track with our plan, pivot to infrastructure, to develop a more cycle resilient and stable performance from our EPC and construction solution business. We are looking forward to more opportunities that will help transform the country into a first world Philippines the soonest time possible. As we pursue these external projects, we are also aggressively building our organic transit-centric development portfolio to complement these big-ticket infrastructure projects. I now turn you over to our Head of Business Development, Attorney Jim Feliciano, to discuss more about these initiatives.
Okay. Thank you, Ed. And good afternoon, everyone. Our land port business started in 2014 when we were awarded a 35-year concession by the Department of Transportation to develop and operate the Parañaque Integrated Terminal Exchange, otherwise known as PITX. So it was awarded under a build, transfer, and operate modality. We completed and opened the complex to commuters in November 2018 to offer a solution to urban mobility issues and provide a blueprint for the modernization of public transport systems in the country. PTEX is a strategically located multimodal terminal hosting a variety of public transportation like traditional and modern jeepneys, provincial and city buses, as well as taxis and transport network vehicle services or TNVS such as Grab. So all of these modes of transport connect to key business districts around Metro Manila, as well as nearby growth centers like Cavite, Laguna, and Batangas. Long-haul trips are also available as far north as Baguio and down south to Bicol, and even Leyte via Roro. So that's a roll-on, roll-off mode of transportation. No? Soon, PITX will also connect to LRT Line 1, which is currently under construction. So that makes it a truly intermodal facility, which I think is the first in the Philippines, practically. Aside from being a transport hub, PITX also houses 4 6-story office towers with a total gross leasable area of about 77,000 square meters. So this space has been contracted for a period of 5 years, mostly to licensed offshore gaming operators. We also have several retail and F&B establishments around the transport hub, and it has around 12,000 square meters of leasable space. So that space caters to today around more than 100,000 passengers daily. So that's as of, I think, May. So amid the lockdowns caused by the pandemic, the land port's financial performance may have been affected, but its public service continued as we offered an efficient, safe, and secure alternative to commuters, especially economic and health frontliners during the COVID-19 crisis. At this point, it was basically used as the main facility for ferrying the COVID frontliners. So it was really used very well during this time. Now this service proved critical and is the main reason why the terminal has now exceeded its pre-pandemic levels, both in terms of passenger volumes and commercial performance. I think what really happened at the time was the government and the public realized how crucial that facility was for everyone to use. And now I think because of that recognition, we've now exceeded our pre-pandemic numbers. No? So we believe that business model centered around transport is really critical and scalable to improve inter and intra-island connectivity around the country. So because of that, currently we are exploring several locations around the country which can serve as potential connecting points to PITX. Now, the long-term goal is actually to develop what we call a hub and spoke model centered in Metro Manila and branching out, and then PTEX, of course, at the helm to different growth centers across the country. Just to let you in on what we've been doing in terms of expansion, we are in advanced discussions for a potential site in Northern Luzon. At this point, we can't disclose, and where we envision to put up a tourist-focused and logistics-centered terminal that will not only complement our existing public transport route, but also support tourism, logistics, and agriculture in that particular area. We are likewise looking at increasing connectivity with one of the fastest growing and highly populous business districts south of Metro Manila through a bus rapid transit system, which is another form of mass transit, that will enhance mobility between Metro Manila and that province, which of course translates to job opportunities through increased commercial activities. Another area we are exploring is an existing melting pot at the heart of Central Luzon, where we plan to develop a more modern and organized bus terminal that will complement the Clark International Airport and boost the region's economic and tourism prospects. Lastly, we are developing point-to-point routes as far as regions 7, 8, and 9 to serve more commuters down south. All these are currently in the works, which we hope to give you more concrete updates very soon as our proposals progress. So So that's it for our land port business in a nutshell. So let me now give the floor to our Executive Director for Infra Development, Mr. Louis Ferrer, to tell us more about our ventures down south.
Thank you, Jim, and good afternoon, everyone. Let me start by saying Cebu Province is a highly strategic location in the Philippines. It has the country's second largest city, Cebu City, and apart from having a strong export sector, it is also a vital tourism gateway. Our presence in Cebu took off in 2014 when GMR, Megawide Cebu Airport Corporation, won the right to develop and operate Mactan Cebu International Airport for 25 years. Overall, Philippine aviation growth was hampered by national and local travel restrictions, which resulted in the country being subjected to the longest and most stringent travel restrictions in the world. On a positive note, these restrictions were gradually removed from Q1 2022, and this has driven a strong traffic recovery at MCIA, starting with domestic flights. We are glad to say that throughout the downturn caused by the pandemic, Mactan Cebu retained its status as a primary gateway to Central Philippines. In the first quarter of 2022, Qatar Airways began operating 4 times weekly between Doha and Cebu, while Turkish Airlines began operating 3 times weekly between Istanbul and Cebu, which gave MCIA its first long-haul European destination. Both airlines expect to increase their frequencies as traffic rebounds. Overall, 8 out of 21 international routes served pre-pandemic or Q4 2019 are now fully operational. 3 additional international airlines, Korean Air, Asiana, and T-Way, have already filed slots to recommence operations in June and July this year. The Singapore route is currently served 10 times weekly by Singapore Airlines and Scoot. This will increase to 17 times weekly with the addition of Cebu Pacific starting June. Also starting this June is Cebu Pacific's daily Incheon service, in addition to the existing weekly frequencies by Jeju Air. By Q3, Los Angeles to Cebu will recommence 3 times weekly, and Cebu to LA via Manila will start at the same time. Cebu to LA direct is expected to recommence in Q4. The international outlook therefore remains positive, even if growth is lower than desired. On domestic growth, MCIA is now operating 23 out of the 24 domestic routes operated pre-pandemic, representing a 96% recovery in domestic routes served. Cebu Pacific, Philippine Airlines, and AirAsia continue to file slots for increased frequencies on existing routes, with 14 additional domestic flights already on sale. Daily domestic passenger numbers now stand at 53% compared to pre-pandemic figures, signifying a sustained rebound. For non-aero revenues, consolidated operations of international and domestic departures in Terminal 2, which began January 16 of this year, has helped drive high sales volumes. As we switch back to 2 terminal operations effective June 16, we expect non-aero revenues to continue rising with the opening of business lounges, duty-free in Terminal 2, and additional domestic concessionaire outlets by Q3 of 2022. So in summary, traffic recovery and non-aero revenue outlook for MCIA remain robust and in line with our sustainable growth expectations. We now bring you to our newest and undoubtedly one of our more exciting undertakings, the revitalization of Cebu's historic Carbon District and its 100-year-old public market. Carbon is around 14 kilometers away from MCIA and serves as a staple source of food and other products to the province. It is also an important cultural heritage site. In January 2022, our subsidiary Cebu to World Development Incorporated officially signed the contract to redevelop Carbon through a 50-year lease contract with the Cebu City LGU. This is Carbon today. Years of rapid expansion and neglect led to numerous infrastructure issues like poor sanitation, inadequate facilities, poor mobility, and crime. Despite having the cheapest goods in the province, carbon markets steadily lost customers to supermarkets that offered better experience. We believe that through proper infrastructure and other systems, we can develop the district into a time-honored symbol of Cebu's heritage and local economy. In total, there will be 6 commercial blocks dedicated to retail, F&B, and transport. We are now in phase 1 of the development, which prioritizes the public market. The Bagsakan is one of our first rehabilitations. This will accommodate close to 600 ambulant vendors or vendors who have no permanent stall spaces in the market. This is an interim building where vendors affected by the construction of the permanent market will be temporarily relocated. It has a capacity of around 800 vendors. These initial public market renovations will help prevent flooding, improve sanitation and facilities so that vendors and goods are less exposed to pollution and weather. In terms of culture and heritage, Cebu City now has a new icon in the form of our 30-foot Grand Santo Niño. The statue, its chapel, and park are part of the cultural revival to attract more visitors and increase more traffic. We have also launched our Sunday market, which has become one of the city's main weekend attractions. Soon, we hope to attract more of the higher spending markets to Carbon. Later this year, we will open Puso Village, which will be a main tourist attraction with over 350 tenants in retail and F&B. It is located beside the waterfront with a stunning view of the Mactan Channel. The culmination of phase 1, though not shown here, will be the completion of the new Carbon Market. This is a multi-level public market building with a GLA of about 20,000 square meters and is designed for the efficient movement of goods, maximizing foot traffic and overall ease of business. Once completed, phase 1 will give rise to an estimated 50,000 square meters of new commercial GLA to serve both local and foreign tourists. Since this is the first public market infrastructure project of its kind, the completion of phase 1 will give us a solid concept that we can replicate in other public markets in Cebu and the Philippines. So thank you again, everyone, and I now turn you over to John for the closing remarks.
Once again, on behalf of Megawide team, we would like to thank you for your interest in the company, and we hope you will share our journey towards engineering a first world Philippines. We would also like to invite you to visit our virtual booth where you can learn more about the company. We also have representatives from each of our business units and subsidiaries to answer your questions. Turning you over to Mr. John Lee.
Okay, thank you. Now we'll start with a few Q&A questions. So far, your pivot to infrastructure is gaining ground after winning contract packages for MCRP and Metro Manila Subway. What other projects do you expect to participate in, and how will these change your order book and profitability moving forward?
Rolly, can I take that question?
Yes.
Yeah. So right now, there are a couple of projects. We expect more projects to be bidded out in Subway. So hopefully, if we can get 1 or 2, and then SRP project, which is South Commuter Line, if we can get 1 only, I think we're good for the next 3 years, 4 years, and then there are other packages or projects will be rolled out by the government in the next year and 2. Hopefully by then, if we have learned and gain our experience, we can also we can participate alone without any foreign partners. So these are the potential projects. So if we get 1 in the subway and another 1 in the South Commuter Line, 2, we are way beyond our quota.
Great, thank you. The next question, revenge travel is seen to drive the revival of global air travel. When do you see the airport exceeding pre-pandemic levels? Do you see a change in MCIA's passenger makeup from the previous 70% domestic and 30% international, considering the recent partnerships with Turkish Airlines and Emirates, which unlocks gateways to Europe and the Middle East?
Roddy, I'll take this question. Okay, I'll answer this in different parts. Part one is I'll break the traffic into domestic and international. For domestic, we believe we will go back to pre-pandemic levels by Q4 this year. As mentioned earlier, we're already more than 50% of our 2019 traffic. For Q4 of this year, we're banking on the holiday season plus the biggest festival in the Philippines, the Sinulog, or the Festival of the Santo Niño, which happens during the third Sunday in January. For international, we're looking at Q4 of 2023 since we're still facing some remaining restrictions on leisure travel in our three key source markets of Korea, Japan, and China. Please note, however, that the International Air Transport Association, or IATA, released a statement 2 weeks ago adjusting their global outlook for pre-pandemic recovery from 2024 to 2023. This forecast of a 2023 recovery takes into account the war in Ukraine and the extended lockdown in China already. And finally, on the issue of the 70-30 split, domestic traffic will remain the majority at 70%. And the addition of new international airlines does not just produce additional international travelers, but also domestic passengers joining these flights from other points in down south of Cebu. So in the short to medium term, the 70-30 ratio will not change.
Okay, thank you. The Paranek integrated terminal exchange has become the prototype for an urban organized public transport terminal. After identifying several potential locations within Luzon, how do you plan to roll out and maximize this model to support people, mobility, and economic activity across the country? And also, Megawide has been awarded the 50-year lease agreement to redevelop the carbon market district in Cebu. Can you tell us more about the business model and how this fits the company's pivot to infrastructure and cycle resiliency objectives?
I'll take the...
You answer first.
I'll answer the carbon. I'll answer first, or... Okay. Okay, in Cebu, carbon is a perfect complement to the airport and other land transportation terminal plans. We plan to put up an integrated terminal exchange similar to a PTEX, which I'm sure Jim will give more information later, which will bring our carbon visitors to many destinations in Cebu. Plus, eventually, if carbon's critical pillar will be the tourism sector. On resiliency, Carbon District is centrally located in a cultural and tourism area in Cebu. Cebu City Hall, the Basilica, the Fort San Pedro, and major universities are all within walking distance. Jim?
Okay. On the land port business, I think the basic business model that we're looking at is using transport as an enabler. So we focus on transport to create the necessary traffic and build a commercial ecosystem around that. That is the basic business model. In terms of connectivity, we want to adopt a hub and spoke model in which all of these hubs that we create, we basically interconnect. So what we end up with in the next 5 to 10 years is a network of intermodal hubs across the country. So that feeds into each other in terms of traffic. So that's the vision. Now, in terms of the procurement model, what we want to pursue is some kind of partnership or joint venture with local government units, because we realize that a lot of these LGUs have an interest in terms of organizing the transport network in their respective localities. So we find that they are very welcoming in terms of investments of this nature. So that's sort of the procurement model that we want to pursue.
Okay, thank you. The next question is, does the company plan to reduce debt levels? And if so, how will this be done?
Okay, I'll take that
Jess?
question.
Yeah, thank you.
Yeah, I'll respond to that in several fronts. First, on the subsidiary level, being the GMCAC Airport and PITX, these are done on a project finance structure. So the debt repayments are patterned after the project cash flows. So as we progress with the project life, the project debt would be reduced naturally. On the Megawide parent side, which involves the construction business, as of full year 2021 ending, our debt to equity ratio is about 1.23 times, which is well below the 2.33 threshold as per our debt covenants. It's broken down into short-term and long-term loans, total of 20 billion, long-term being around 5.7 billion, and maturities are also stretched. The first maturity for our long-term under the parent level will be in 2024, about 3.6 billion, and 1.9 billion in 2026. So the debt maturity tower on the parent level side is also pretty much manageable. On the short-term loan side, it's about 14 billion as of end 2021, and this is mainly tied on the project progress on the ground. So as mentioned earlier in the presentation, coming off the pandemic, naturally we also experienced some challenges, particularly on collections. As of year end, we have a total of about 7 billion in trade receivables, broken down into contract receivables and retention receivables. So as we progress on our projects, we expect to collect this, and naturally the short-term loans will also taper down. Another factor contributing to the short-term loan increase would be for new projects. As expected, we need to mobilize. There's also this challenge on rising costs. So we take advantage of locking in prices in advance with our suppliers to protect us from further price escalation in the short term. So again, similar to the long-term loans, it's all dependent on the projects, and we feel that we should be able to go back to pre-pandemic level on the short-term loans in 1.5 to 2 years maximum.
Okay, great. I think we have time for one last question. All the unanswered questions management will send to the audience via email. Now, based on your fiscal year 21 results slide, Infra remained its share of 17% in EPC order book. By how much can we expect this to change as we go through 2022? Thank you.
Yeah,
Ed?
can I answer that? Well, the strategy of the company is really to increase the share of the infrastructure order book portfolio. So the target is really to do like a 50-50. So we hope probably by next year we can more or less know, and there's a high probability we can get that 50-50 share by next year.
Okay, thank you very much.
John, can I just add to what Jess just
Yep.
mentioned about the short term? Basically, well, of all the debt issues, the spike of the debt. So the number one big item there is the short term. So the short term debt, basically the short term. First reason, when the pandemic hit, so it took us quite some time, some of them 1.5, and there are some projects we're still doing the negotiations to do a renegotiation of the contracts, meaning, so because of that, and then there are also other projects where clients have decided to stop. So all of these, like more than 20 projects that we have undergone the negotiation. So because of this, there was a sudden increase of the short term. But contractually, we are now at around 70% of all the projects that have been reconciled in terms of contracts. So client have already and us have agreed on a certain terms of payment, like a payment schedule for them to pay. So we expect this to taper down in the next 6 months to 1 year.
Okay, thank you. Thank you very much, Megawide. Thank you for the Great discussion. Now, our next featured listed company is Cemex Holdings Philippines. Joining us on stage will include Alejandro Garcia, Vice President, Planning and Administration, Pierre Ko, Investor Relations Director. Cemex team, over to you.